All right, good afternoon, everyone. It is 13:29 or 1:29 in the afternoon on October the 13th, 2021. And today I get to do a $193 recap. I'm looking at the SPY right now, and I'm sitting here looking at it. You see these SPY contracts up here, call or strike of 434. Expiration on October the 27th. I had four of them, and I got out of them just above break even. I mean, I got out of them up $1.74. I mean, it's like it doesn't even register as a penny. It's like maybe a half a cent profit on each contract after fees. So at least I got out of it, without going red, right? But I'm just gonna pull this thing down now. Here we go. I had this trade all planned out. I was like, okay, 431.54 ought to be support. 432.78 was yesterday's close, so it ought to close. That ought to be the next spot for it to find support after hitting 434 or 431.54. So I bought one contract right here, and then it looked like it was about to break through 433.41, which is the bottom of this breakdown candle right here. So I bought another one there, and then I bought another contract there, and then I bought another contract at this high right here, 43.33.97. I bought it right at the close of that candle. So I was long four contracts at an average of $5.11 per contract, right? And I was like, this thing is going back. It's bullish. And something else too that I'm kind of leaving out, the context I'm leaving out, is that the dollar is breaking down today. I mean, it's really like, so the dollar, we're supposed to be going into a positive growth environment, economic environment. And it's supposed to be very bullish. And there have been a couple of things that have been really throwing a wrench in what's supposed to be rotating already in the market. And one of those things, among many, is a strong dollar. Unanticipated, very unanticipated, this dollar. So today, I mean, the dollar, it's come off by almost a 0.5%. This is the top end of the risk range of the dollar. Here's the bottom of the risk range of the dollar. It's just been really throwing a wrench into the works, right? Okay, so this morning, when I got in this morning, I was like, oh, hey, look at that. So let me actually, when I woke up this morning, I checked my phone. I was like, oh, neat, look, it's going to be bullish today. The dollar is finally giving up its ground. This morning, pre-market, the dollar was like below the previous day's open. So it was really giving up some ground. I was like, okay, today's, it's time to start getting like aggressively bullish today. I've been setting things up for the past 3 weeks to transition into a bullish environment. And today I was like, okay, I can get aggressive on trading bullish setups today. And so here I was in this thing, and it was, and I was like, okay, I'm looking for a push to the open. And so I let it go. Here's this red mark right here. I was anticipating the break right here. It spent, let's see, this is the 5-minute chart. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Spent 55 minutes, kind of in this range, and it was acting like it was going to push, and then it started falling away. And so right here, close to the bottom of this candle right here, I let go of my position before it turned red on me. And now look at this. Look at this. As of right now, I'd be up a cool, I don't know, maybe $300 on this trade. I was in at roughly $5.11 per contract, and the bid is at $5.81 right now. So it'd be 80 cents per contract. On 400 contracts, $320. So, one day I will be the trader that I am. I don't know, that sounds really weird. I had this all scoped out. I had this all planned out. And I was right. And what did I do? I let it go before I could realize my earnings on being right. Okay. So, I get to learn to be patient and gut out the small dips. And it really did give just like this little shakeout, and then, to shake out the weak hands. And I'm not a weak hand, but I do act like it sometimes. So what did I do right today? I managed to take down my risk and lose small. I didn't exactly have big gains today either, but I definitely did a good job of keeping my losses a lot smaller than my gains. So you can see here, JSPR. I had like one or two decent trades on JSPR, and then after that I was like, I know momentum is just really difficult these days. So here's JSPR. Now, first of all, I missed. I guess JSPR was hitting the scanner. It wasn't hitting the scanner this morning. It wasn't on my scanner this morning, pre-market. But this thing just started hitting the scanner and started ripping, and I didn't notice it until it hit right here, right? And so I got this yellow $15.80. Yeah, $15.80 was the high from back here on the 24th of September. And sure enough, the first, I think it was 100 shares that I attempted. Yeah, the first 100 shares that I attempted to trade was right there for the break, for that first break of 1580. And it's really too bad, old school momentum, would have been this break of 1580 would have just kept going right here. But instead, again, and this is something that I really need to get used to, is there were a bunch of sellers ready to just dump right there at the break of that price. Unfortunately, fortunately I kept the losses small. I think I was in right at 1580, and it started to dump after that, and so 26-cent loss, and so I let it go at $15.54, and I was in small too. And so then the next time it came through and broke through 1580, I went ahead and bought on that one. I was like, it's not coming back up to 1580 just to fail again. And the level 2 is going nuts. I mean, the level 2 is just flashing so quickly. I couldn't keep prices sort of still. So I did manage on that one. I bought 100 shares on the break, and then I bought another 100 shares on the next break. And or I bought another 100 shares. Let's see. Well, it pushed from 1580 to 1730, and I managed to get 95 cents of this move on 100 shares, and then 26 cents on 100 shares of this candle. So basically $1.26 on 200 shares. So, $120 on that trade. So I was like, okay. And then it started to die away. And so I wanted to trade for the break of 580 again, but I was smart and I did it with a really small share size. Like I did it with a share size of 10, these two fives right here. Then I did it with a share size of 20. And so fortunately, I didn't do it with the same share size as my winnings. And I had a bad feeling about it, not being able to hold these support levels. But then it came through this 1580 again right here at close to noon, and then took off to $18.24. Unfortunately, this is what I really missed out on. These are really clean setups. Here's a high, 1166, a pullback, and then a push through again. Then the next high, and these are all 1 minute highs. 1 minute high, a pullback, and a push through again. You could buy at 1266. I could have bought at 1166, then 1260, and then another high, super clean setups. Another high, another high, a pullback, and then a push through 1332. Textbook. Yeah, and it's really too bad. I mean, I didn't get to see it this morning, but these are textbook entries, textbook momentum entries. And, I did not get to play it because I didn't see it on the pre-market setup. And then I don't know what I was watching. I must have been watching and trading something else to have not seen this thing hitting the scanner. It gapped right here. Let's see, 932, 933. It squeezed into a halt, and then it opened up 10 minutes later and gapped up. So it closed at 979 and closed and opened up at 1058 and then squeezed to 1161. So from this halt at 981 to the close of this 1 minute candle at 1165 was almost a $2 move. And now this is the way that the first year that I traded momentum, small cap momentum. And this is the way things would act after they came out of a squeeze. They would gap up and keep squeezing higher and then, and continue to squeeze. Instead, nowadays, what happens most often is something will go into a halt. It'll halt, do a 5 minute or 10 minute halt. And when it opens up, instead of gapping up, it gaps down. It opens up lower than when it's squeezed into the halt, which is obnoxious. And so, unfortunately, I did not have JSPR Therapeutics on watch this morning. And I got into this thing late. Fortunately, I managed to get in on a winning trade. 1830, a high from, a previous all-time high, worked out. Or I'm sorry, 1580, an all-time previous high, worked out, fortunately. But then there wasn't anything. I didn't have 3 or 4 chances to trade it. I only really got one chance. I could have kept a closer eye on it and maybe traded it again. But that's a really tough trade. This is easy money right here. When you catch these momentum stocks behaving this predictably, that is easy money. Easy money. Fast and easy money. All right. Well, I missed it. I missed the vast majority of the moves that it put in today. So, too bad, so sad. But at least I did get to make some money on it. Even though it was only a little bit. Okay, so then VST. So VST this morning, I bought 100 shares of VST. Now I have first in, last out. So what that means is, last in, first out. So what that means is, this morning I was watching VST. This is one of the ones I had on watch, and it opened at $19.45. It dipped down, and then on its second candle, it did a really nice job of moving up. So I had 1963 and 1945. The open and the 1963 was a level. Let's find out where I got 1963 from. Okay. So that's 1963 is the top. It's technically not the top of the gap. You see this gap right here from. Technically, the gap is from 2273 down to 1866 is technically where the gap is, right? But I put the top of the gap at 1963 because I find that price resistance and support doesn't really follow the true gap. It just kind of follows the next highest point after the gap. So I used 1963 today. So here we go. Let's go back over to this morning. And I had 1963, the open, 1945, and then 1963, right? So this morning, I bought 100 shares at 1945 as it crossed back above its open. Hang on, let me check something here real quick. Something's SOTK and ICD. Let's pull those up real quick. SOTK. Did this? What is going on here? Strange. I've only got a 10-minute. I've got a 10-minute right here. It's only showing me 1 day's worth of information on the 10-minute. I wonder what the news is on this thing. News on SOTK. Sonotech reports strong growth in sales, profitability, and backlog. Well, okay, not bad. All right, well, it's hitting the scanner. Let me check out the chart. Doesn't look that great on it because it's so gappy. Let me look at the level 2 and see how the level 2 is moving. Level 2, all right. It's doing all right. Okay, so VST. And so then I bought another 100 shares at 1963. Had an order ready to go and got filled on this candle right here. And it started running up, and I was like, okay, cool. This thing looks like it's actually, going to really start running. Maybe we'll have some momentum. Maybe, this thing will, be a big winner. Well, so it started crossing back down below 1963, and I thought that I had sold the 200 shares of VST that I'd bought. So it dropped down 9 cents below 1963 when I tried to sell it. Let's see, so I tried to sell it at 1954. So I tried to sell it like right here. And I think that would have put me at roughly break even. Let's see. Uh, 19.63 plus 19.45 equals divided by 2 equals 1954. Yeah. So I thought that I'd sold 200 shares. I thought I'd sold all 200 shares, but as it turns out, I'd only sold 100. I don't know, just goofed, which I've done before. But anyway, yeah. And so I was still holding on to 100 shares, and I didn't realize it. I was holding on to 100 shares at $19.45 as it dipped down through here. Well, so I put my alarm back on in case it started running up back past 1945 again. And my alarm went off, and I looked at, and I bought 200 shares. Let's see, you can see right here, I wound up selling 300 shares right here, 169, 31, and 100. And I sold them, I don't know, for roughly, let's see, 21, 25, for an average of 8 cents per share. And I actually got freaked out. It did okay at that point, I think. Yeah, it started going back up above 1964 again. But I got freaked out because, like, wait, I'm not supposed to have 300 shares. I'm only supposed to have 200 shares. So I was like, all right, let me get out. I screwed up the trade, let me get out. I'm not going to, be like, oh, well, let's see how this works out. When you screw something up, you just got to get out of it. So I got out of it, and made a little bit of money on it. Did okay, a little bit of money. So, okay, then what was the next thing? We went over JSPR, VST, plug. Okay, yeah, and plug was, it was a good trade. This thing was tough. So here it is. Here's the open. And how did I do this one? Let's see. I have the times here. Plug. Close time was at 9:48:44. So 9:48. Okay. I closed it on this one, and I made unplug. And see, I made 62 cents and I made 20 cents. So 32.48. Okay. So I bought 100 shares here at 31.98 when it came back and dipped down below 31.98. And then it crossed back above 32.48, and I bought another 100 shares. And it went up, and I was actually up like $150 or something. And then it started coming down, and so I finished. It went up to 33.03, and I wound up selling it. Let's see, for 62 cents profit. So 31.99. 31.98 plus 62, $32.60, and I sold it on this candle right here. So I sold it 32. Sold it right at the bottom of that candle. So okay, and then I was keeping an eye on it. And it on the 1 minute here, it seemed to be using this as support. But what I don't like about using, I don't really like using support. I prefer price levels. So now if PLUG bounced here, actually, this is actually a pretty decent entry, but it didn't really go very high. But if it bounced, say it bounced here off support and then moved past this high, then that would be an entry. But you can see here, it was using this line, this trend line right here as support. One, two, three really clean bounces off of the support line right here, but then fell through it and dumped down. I don't really like using, in my experience, support lines really haven't been all that profitable. And here's kind of the reason, at least intraday support lines aren't. So I didn't have this support level. Like, why didn't I buy at this support level then? Well, I didn't know this was a support level until this price right here occurred. I mean, I'm using this data point right here as a level. And so when it came down here, it came down close, but didn't really touch the support level and then moved away. I couldn't really use it as support. And then by the time, so here, yeah, I could have used it 32.70 to 32.98. There was 30 cents move there, but I would have gotten flushed out of it. That if I'd used that as an entry, there was a 30 cent run right there. But it's not really what I'm looking for an entry. I'm looking for larger runs. So then let's just get rid of this support line right here, trend line. And so then it came back into some support levels right here, and then finally made it up to this Fibonacci. The idea was for me to have gotten in at this Fibonacci, which is the opening price, and then hang in there until it got to this Fibonacci, which is, let's see, $1.35 higher. But that's a lot. That is a lot of up and down to hang on to for the entire time. Maybe, as I get better at trading, I'll be able to hold on for that entire move. But I've just had so many trades turn against me in my experience as a trader that's like, take profits. In addition, the strategy is for 1 cent, or I'm sorry, not 1 cent, but 1%. So a 32 cent move, is a 1% move on this. And that's pretty much, so 31.98 up to 32.50 is more than 1% of profit, I have some sort of more seasons to put underneath me or to get past to, I think, be just a really great trader. I'm profitable. I'm a profitable trader. That puts me in the top 10%. But to be like, a top trader, I've got some more seasons to get behind me. So that's pretty much it for the day. I get to be happy with $193. My strategies were doing okay. We're coming into the time of the season where it's going to be, smart to put on more risk, to take more risk on trades. Yeah, we'll see how things go. All right. A couple of things. I'm kind of looking at silver here. Just kind of. So silver bounced off of this 1988 level. That's a gap. I love gaps, by the way. I love gap levels. I love to trade gap levels. So here's the bottom of this gap. The silver gapped up from July 20th, 2020 to July 21st. It gapped up from 1861 to 1948. Huge gap. And then another huge gap on the 21st, from the 21st of July to the 22nd of July. It gapped up from, let's say, 1962 to 2073, another huge, enormous gap. Well, so the bottom of this gap, I'm going to call it the bottom of that gap, is 1988. And here we are, flash forward more than a year later, and silver came down and touched that 1988 level from about a year and a half prior, and is now making a stab for this $21.44 is the level that I have on Fibonacci for silver right here. I'd love to see it close. It's having a hard time here finishing on the day above 21.44. I'd really like to see silver close above 21.44. And what's interesting is that oil isn't really behaving the same way. So silver's reacting really well to the weak dollar. So where'd that dollar chart go? Here's the dollar. Beautiful breakdown. I mean, really, like, you don't get breakdowns in the dollar like this very often. Moves in the dollar like this. You don't get 0.5% moves in the dollar very often. And I really think this is the start of the breakdown for the dollar to start moving to its the lower end of its risk range. And this ought to be a trend starting today that continues for the next 6 months. So it's conceivable that we could be back down in the next 6 months. We could be back down in, say, the low in the night on a 90 handle, with a 90 handle. If things keep working out the way they're supposed to work out, then we could be in 6 months from now at a 90 handle on the dollar, which would be really good for silver and for gold. Well, actually, it would be really good for commodities. Gold is not a commodity, though. Silver is a commodity. And what's interesting is that B&O, let's get B&O up here. Oops, silver. B&O isn't exactly, I mean, I guess it's doing okay. 21.98 is going to give B&O a little bit more trouble. I'm not interested in B&O again until it can get up and hold 21.98. Until it can break above and hold 21.98. I'm not interested in averaging into B&O again. If it can get a hold above 21.98, and if it can get above it and hold it and continue forward from there, which means a move past $22.22, then I will be interested in B&O again, but not until then. Not until it can get back above, let's see, 21.98. 21.98, hold it, and then move past the 22.14 or 22.10, whatever that was. Something else that kind of crossed my mind today with the airlines thing that happened with the airlines Southwest. I was like, well, gee, I wonder how Zoom's doing. You know, if airlines are going to start, like, if airline employees are going to start kind of doing sick outs or whatever it is, I'll bet you Zoom catches a bid again. And here it is today. It's up, let's see, it's up 3.9%. Yeah, 3.9% plus $10 on the day. Kind of funny, you know. Yeah, so the other things I was watching today, let's see, plugs by apps. Did I trade apps? No, I bought one contract on apps today. But one, and I bought it kind of high. Let's see, where is it? Yeah, apps. So fortunately right now, I'm only down 65 cents on it. I was down as much as I think $80 on this one options contract today at one point. I bought one options contract on apps at roughly this price range right here this morning. I think it was right in here somewhere. It was pretty high this morning. I paid $8.80 for the contract. And so I'm looking to average in, and I could have gotten it for more like $8.10, you know, which is a difference of about $70, you know, and I'm looking to average into apps as I want to see it cross above 84. I don't know if it'll do that today or not, but the move that I'm really looking for is the move back to 102. Will I get it? I don't know. You know, if this thing if it behaves well, then you know, I'll average into say 4 or 5 contracts over the next, I'd say 2 weeks maybe, and then see how things end from there. Look at the SPY. Look at that. Boom, right through the opening, and now it's catching a bid big time. Gosh, if I'd held on, oh boy. It's just a shame to see that, you know. And now it's hitting 2 o'clock. Yeah, this thing, it is definitely time to get bullish. I think we've seen the dip on the SPY. I think that's pretty much on the S&P. I think that's pretty much it. I think it's time to turn bullish, people. Yeah. The next spot to break and hold is 41.40. The dollar's still breaking down. Yeah, things are getting pretty bullish here. The VIX is breaking down. Very nice. So then BILI did a pretty decent job today. I thought about trading this today, but you can see the price action is so choppy. And it's Chinese. I don't really want to get involved with Chinese stocks. KOSS, what a bunch of BS. This, you know, there seems to be a trick. So this was on the pre-market scanner this morning. KOSS was. Same thing with GWH. Crap. Total crap. KOSS and GWH. Baloney. Horrible. The one that wasn't on the scanner this morning, it wasn't on the pre-market scanner, but it started hitting, was JSPR. JSPR. Now let me show you the difference. Look at this. I'll go to the 1 minute. 1 minute's good. These price levels, picture perfect momentum trade. Picture textbook perfect momentum trade. Let me clean it up a little bit too so it's easier to see. I'll get rid of the fib. Make the moving averages disappear. So all you see is just the price action, just that price action right there. See that? High, dip down, break to new highs. 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 Now this one actually, this level up here at 1469, that was a bit trickier. But then over 1580, so on and so on. And compare that to what has been pocket. Look at this, garbage. Breakdown, 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 breakdown. You know, pre-market action, you know, the pre-market action looks okay. And here we are, KOSS. Breakdown, 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 garbage, 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 garbage. And now these two, or I'm sorry, KOSS and GWH, those two, they were on the pre-market scanner, obvious pre-market scanners. But JSPR wasn't. That one started hitting the scanner and started going nuts. So the game has changed. The momentum game has changed. And it's time to adapt. If I want to make money, because this is, I don't want to say it's, I mean, trading isn't easy. Trading is tough. But when it comes to easy, like the easy setups, making money on momentum, it's fast. It resolves itself. You know exactly when you're right, exactly when you're wrong. Higher prices lead to higher prices. It's a nice way to trade once you're used to it. A lot of people never get used to it. So anyway, all right. That's my rant on small cap momentum. All right, everybody. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.